handling all our IT operations. Amit Sagar, sales lead based in Sydney. Sadaf, delivery manager. She was more in residential space, but at the moment she is handling all of the commercial transactions for our clients on the delivery part. Mohnish, again, delivery lead from Sydney. Rashid, his sales and delivery consultant. So he is one of our client as well. He purchased his first commercial property from us. And then he liked the process, he liked the transactions, he learned a lot during that process, and then now he is the proud member of our team. And then Prabjot Kaur, sales and delivery consultant based in Melbourne. So this is our entire team, but yeah, we are still scaling our team, trying to add more members, considering the results, considering the success, or considering the response we are getting from the audience in the market. So yeah, we are trying to grow more on that. So yeah, as I mentioned at the start, so we are one of the RAB Innovation Awards, like we are one of the finalists, Commercial Buyers Agency of the Year. So this was the first time actually we nominated for any event, and it was a proud moment for Team MMP. Like we stood as a finalist. Like although we couldn't had the trophy, but it was a like there was no regrets, there was no complaints, like we couldn't get the trophy. But to have the plan, like to share the platform with the big brands like the Investors Kit or the Palace Property, who got the numero uno position, in this industry, we were sharing the dice with them. So at the moment, we always proudly say, like, we started this business operations like only 3 years ago, and now we are in the among the industry experts in this commercial space. Now, regarding the results, our track record, what we have achieved in the last 3 years' time. Our track record, like in financial year 2026 itself, we settled 77 commercial properties. So in commercial properties, someone may think that like the residential investors, residential buyers agent basically say 200 numbers, 300, 400. But in commercial, if you see, the transactions are always less. Inventory is always less. Buyers is always less, right? But considering all these factors, 75, 77 number properties is settled in one financial year, it is a great number. And the total dollar figure, if we talk about it, is 53 million plus, right? And we purchase properties across 6 different states. Except Northern Territory, we have purchased everywhere, right? At the moment as well, we are very much active in Queensland, Victoria, NSW, and South Australia, right? Though we have purchased properties in Western Australia and Tasmania market, but at the moment as well, we are not very much active. But still, if the deals are coming or the everything is good, happy to go over there. And in this year, in the last, we are sitting in 17th August, in the last, I would say 45, 46 days, we have already finalized 18 commercial properties, right? With a transaction of more than $12 million. So yeah. So commercial transactions finalized in the last 30 days. So I was in the previous slide, I was showing about the 45 days, but in the last 30 days, these are the 15 commercial properties which we finalized, right? So like you guys can see, people are always skeptical, always, curious, like what kind of purchase price should be there. I have only 100,000. Can I start my investment journey? But you can see here, like the purchase price was 235,000. So this is the bare minimum price which we have purchased the property in the last 30 days time. And below 500, you can see there are maybe 7 or 8 properties which we have finalized, right? Above million, there are only 3 transactions. But yes, we are working in this space as well. But the buyers in the price range of more than $1 million are like, there are the buyers. But yeah, if we talk about the numbers, because we need to understand, there are majority of the buyers are the residential investors who want to pivot themselves from resi to commercial. So their budget remains from 500,000 to 800,000. So they are trying to diversify their investment. They are trying to pivot from one asset class to the another asset class, right? But yeah. So the rental return also, you can see, starts from 6.5% to maximum of 10.6% with positive. Every property, like you can see here, it's the positive cash flow. There is not even a single property which is generating negative. And on the tenant side as well, it is a different tenancies. There is a NAB is a tenant, NDIS tenant, restaurants, Vinny's, government tenant is there, advertising agency, and the leases are always the mixed leases with the years of options and all that, right? And the numbers which the positive cash flow numbers, whatever we have used here in this slide, it is in majority of cases it will be considering the 70% LBR, 70% loan to value ratio mortgage, and interest rate of around 6.55%, because this is the nominal interest rate, conservative interest rate which we are getting. And the 70% LBR, why we are using, because every commercial property doesn't qualify for 80% LBR, and in majority of our transactions we have achieved close to this LBR. So we have done the numbers based on that. Next, Rakesh. So these are the commercial properties basically under 500K market examples. So these numbers basically, I will not say these are the life to date numbers, but these are the properties which we are trying to show you we have purchased below 500,000. These are few examples out of the properties which we have purchased. So again, in this, like you can see, in every state we have purchased the properties, in South Australia, in Victoria, NSW, Queensland, WA, right? And the rental return again varies from 6%, 7%, 8%. So the maximum here I can see is again more than 10%. But at 9% rental return, there are a couple of properties. At 8%, there are a couple of properties. The long story short is basically whatever properties at Make My Property we are buying. First thing, it is always and always tenanted properties. Like from the day of settlement, you will start getting the rental income, right? We have never purchased any vacant property. The reason is, on the vacant property, first thing, it is really hard to get the mortgage. And the second thing, investors are always skeptical, in how much time they're gonna get the tenant in that property. And the third thing, the GST is also applicable if we buy any vacant property. So this is the reason we always buy the tenanted properties. And the other reason is we are buying these commercial properties for the investors, not for the people, not for the like who wants to occupy the properties for themselves. Right. So from the day of settlement, they start getting the rental income, no stress on the mortgage, no stress for paying the outgoings. From the day of settlement, it will start giving you positive cash flow, considering the purchase price, whatever we mentioned. So you can see in one of the example, for example, in the first property by Ala Nori, South Australia, on a purchase price of 220,000, this property was generating around 9,000 positive cash flow per annum. Like you can see at this price point, you guys cannot even buy a block of land in any part of the Australia. But here it is a tenanted property with good lease, proper building, freehold property, and generating positive cash flow. So these are the examples. And to see, if you want to see more examples, these are available on our website as well. So with the detailed numbers on tenants, on LVR, on rental income, on lease. So everything is there. Next. So I will hand over this now to my business partner, Rakesh. So far, if you guys have any question, and I haven't mentioned this, so we will run this, obviously, this webinar for the next 60 minutes, 80 minutes. It depends how long it goes. But if you have any questions during the webinar, you can raise your hand, or please put your question in the chat box. We will try to take your questions as we go, but we have a live question and answer round at the end of this webinar. But we will take all the questions, we will answer all the questions. Like we are not in rush, like we need to finish at 8:30, 8 o'clock, 9 o'clock. We are not in rush. How many questions we have, feel free to ask, and don't just don't shy to ask any question, because this is the real estate industry for which people don't have much information, right? So don't think this question is very basic, or this question will look absurd, or this question will how can I ask this question. Whatever you have in mind, please feel free to ask. So yeah, Rakesh, please carry on.
Thanks, Vikas. Thanks a lot for your good introduction and explaining about what we have done in the past, what sort of properties we have secured for our clients. So before I start with this slide, I just want to add a few housekeeping things. Like as Vikas already mentioned, if you have any question at any time, please you can type your question in the chat window instead of keeping it with you. And time to time, our team is reading your questions, and we will be answering all your questions, and you can ask as many questions as you want. So we want you to be fully confident after this webinar. Any question in your mind, you can ask. And on top of that, any property that we have bought so far, more than 90% of those properties below 500K, I'm not talking about high price properties, are freehold properties. So we are not buying any strata offices. We are buying, but most of the properties properties are still freehold properties with good tenant, good location, strong leases. Now, talking about some of the things that has happened in the last few months, due to which everything has been changed in this investment market. Most of you now already know because it's a long time now. On 11th of May, during the budget, there is a change in the negative gearing. So, from 1st of July 2027, what's happening is the any loss that you have on your residential property, it cannot be offset against your salary. You can carry forward that loss, and once you sell your property, once you have any other capital gain, you can offset against that. But lot of people who are in high income bracket, they were using that as a negative gearing tool to save their tax, but that's not more possible, no more possible from 1st of July. So only the new builds, if you're buying any new build, it can be a house and land package, it can be a new build just finished, or those properties will retain the benefit of negative gearing and also the benefit of the capital gain tax. So any property that you have bought before 12th of May, which is the budget night, they will be grandfather. Grandfather means all the benefits that were there before the budget will still be there for those properties. Or now compare it with the commercial. So commercial, there is no change at all. So all rental losses remain fully deductible against salary and wages. Like in our case, this scenario doesn't matter because our properties are positively geared. But in case if you do any capital expense and there is some expenses done by you over the course of holding the property, those are still deductible as part of your salary and wage. There is no bill date condition, nothing. You can buy established property or new property. There is no such condition, and there is no expiry date. This advantage is permanent under the current law. It applies to all the commercial assets. You can buy any type of commercial assets, industrial, office, retail, strata. So these benefits are there for all type of assets. So it's not categorized for any particular type of asset. Now, when it comes to SMSF borrowing, for which a lot of investors are now looking around, the cutoff date was 10th of August to buy any residential property. After 10th of August, the LRBA, which Vikas has already explained, limited recourse borrowing arrangement has been stopped. What it means is like you can't anymore buy the residential property under the SMSF. When I say residential property, it means you can't borrow the money. If you have a cash, like you have a 400K, 500K in your SMSF, and you want to buy the property on cash, you still can buy residential property, but you can't get the mortgage from any mortgage broker if you're buying any residential property from after 10th of August. So that's where, and that's the biggest challenge because 95% of the investors were buying with the mortgage, either 70%, 80%, 85%. But after this arrangement has been stopped, there is no more borrowing, and most of the investors are now not able to buy any more residential properties. So, what is available now? People think that they can't buy any more assets in their SMSF, which is not true. That's again a lot of people. I got calls. People ask, just in general, that what should we do with our SMSF? We have already set up our SMSF. We have money sitting there. We can't secure the property before 10th of August. Now, what should we do? They are not even aware that they can buy commercial properties. They have understanding that they can't buy any real estate asset under their SMSF, which is not true. You can't buy the residential properties, but for commercial, the market is still open. All the lending, everything is totally open to buy under the commercial. So there is no changes for the commercial purchase under SMSF. Now, what should you do considering if you are an SMSF investor? You should weigh your options in the market when it comes to the investment. The After the residential stop, the other investment options are people buying the stock market, people buying gold, they are buying crypto, they are investing in commercial property. So these are still the different type of investment options that are available to the investors under SMSF. Other than commercial property, all other investment options you need 100% cash. There is no leverage. Like if you want to buy gold, if you have 100,000 in your SMSF, you can buy gold worth of 100,000. If you want to buy stock, you can buy stock of worth 100,000. But the benefit of buying real estate is the leverage that you can borrow 70, 80% from the bank. And when you sell your asset, you're not sharing your capital gain with the bank. You are only giving them the interest repayments over the time, and those interest repayments are actually you are getting as part of the rent from the tenant. So you're not giving anything from your pocket. Instead, you're getting something extra after paying their mortgage repayment. But when you sell the property, you are getting the capital gain totally, which is yours. You pay a little bit of tax, but that's the biggest leverage of buying the real estate asset in your SMSF instead of buying other type of investment things. Now, why the smart money is moving to commercial? First reason is negative gearing fully retained. As I mentioned, there is no such change for the SMSF buyer. You can still buy the commercial asset in SMSF, outside SMSF, and there is a negative gearing fully retained. In commercial properties, tenant pay the outgoings. A lot of people doesn't know what the outgoings mean. So outgoings are any extra expense other than your mortgage repayment. Mortgage repayment is one fixed expense that you are paying to the bank. But other than that expense, there are so many other expenses which are ongoing, which a lot of people won't consider when they buy the property, which include your council rates, which include water rates, which include building insurance, property management fee, your ongoing maintenance. These are some of the ongoing expenses which comes under outgoings. In commercial properties, the most of the outgoings are paid by the tenant, and I will talk about different type of leases, which talks more about which type of outgoings are paid by the tenant in which type of lease. But when I say outgoings, 80% of the outgoings are paid by the tenants in most of the leases. So in commercial properties, the leases are not 6 months or 1 year. The leases start from 3 years minimum, and it goes up to 20 years and 25 years. There is no limit for the higher number, but it starts from 2 to 3 years and goes up to 20 years. So that's where the biggest benefit is when you buy the property and there is a 5 year lease signed for that property. So you know for next 5 years how much money you will be getting as part of the rent, how much increment is there every year. So that's where you get the confirmed income from the commercial properties. So in commercial property, the yield is higher, which already have Vikas have shown a lot of example that more than 90% of our properties we have bought are above 7% net rental return. So don't confuse now, guys. When I say net rental return, it means all the outgoings are paid by the tenant. 7% is coming to your pocket. If you're buying a property of 500,000, there will be a rent of 35,000. You are only paying mortgage repayments from that 35,000, and in some cases you are paying the PM fees. Otherwise, most of the outgoings are paid by the tenant. SMSF borrowing still available, which is again a major factor. People can still borrow for the commercial purchase under SMSF, which is now the only option left if you want to invest in the real estate from SMSF. Low land tax. So commercial properties are normally having land tax if you're buying using strata. Even if you're buying without strata, the land value in the commercial is not, the councils don't change the land value very quickly as they happen in the residential market. So normally the land tax in the commercial properties are quite less as compared to the residential properties. So moving forward, this is the main important slide that I want to discuss. And after this slide, I will take few questions and then we will move forward. So let me explain this slide. I think this slide will answer a lot of questions. If still there are questions, I will take few questions after this slide. So first of the myth is high vacancy risk. So high vacancy risk means people says the commercial properties goes vacant. There is a risk of high vacancy. I totally agree with them. But you have to understand if your due diligence is not done properly, if you are buying with emotions, if you are not buying based on data, numbers, any type of property, any type of investment can bring losses to you. I have seen people losing money in the residential market. But if you are using professionals and professionals are buying properties based on the numbers, based on the facts, based on the history of the tenant, the type of business tenant is running, and how long the tenant is in the building. So the potential, the risk is mitigated. I'm not saying there is a zero risk, but a lot of risk is mitigated if you are doing proper due diligence before you buying the commercial property. People think there is no capital growth. Again, it's a very big myth. The reason for this myth is, I will say, because there is no public data available. What happens in residential market? You enter any address on Google, it gives you the complete history of that particular property, that it was sold in 2021 for 800,000, then it was sold in 2025 for 1.1 million. Now the current value of this property is 1.25. It gives you confidence that this property in the last 5 years has been growing by at least 10%, 15%. And there are a lot of news also coming, lot of new news from different channels, different stats coming from different agencies related to the residential market, like Queensland market growing by 10%, Victorian market has only grown by 4% in last 12 months, which gives more confidence. And the third reason is, you will see around your friends, your colleagues, your family members, everyone is investing in a residential property. That's where you get more confidence that if everyone is going into that path, it should be a good path. It can't be wrong, because everyone can't be wrong. I'm not saying that's a wrong path, and I'm never against residential. I myself have more residential than commercial. I always say you should have a balanced portfolio. So, but I want to tell you the myths, that you should be having balanced portfolio. You shouldn't keep on buying one type of asset. You should buy all the type of asset, because every asset type have their own advantages. So when people say no capital growth, it's not right. I can give you more than 10 examples, live examples, which where the capital growth of the commercial property is more than residential property. Another myth is need a huge deposit.
Rakesh, I want to add something in these two
Yes,
points,
yes, please. Yeah.
like on the high vacancy risk first. So yeah, so if we are talking some specifically on this example, right, high vacancy risk. So yeah, investors always say high vacancy risk. If the property is vacant, right, then it takes months, years to get the new tenant. But the thing is, like, if we are a proactive investor, right, so in any commercial lease there is a time period, like in the 3 to 6 months time, the tenant has to inform or advise the landlord whether they are renewing the lease or not, right? If I am a proactive landlord, right, so if I know my lease is going to expire in the next 6 months time, I will start asking, 6 months in advance from my tenant. If he says I'm vacating the property in next 6 months, so then that that is a red flag for me. From that day onwards, I will start my lease campaign. I will hire the local real estate agents and start the lease campaign. In this way, basically, we can mitigate the risk, right? So our job is basically to mitigate the risk. The risk is always there. If we are getting rewards, the risk will be there. But how to mitigate that? That is the professional's job. And second thing, if any tenant leaves the property, for example, and if we can take maybe, if it can take 2 months, 3 months, 6 months even to take the new tenant in the property, and if any new tenants comes in the property, you can ask for a higher rental return. You can, if any new tenant comes, he may spend maybe around 100,000, 200,000, $300,000 on the fit outs of the property. And if he spend the money on your property, the valuation of the property will be getting higher. So don't think if a property gets vacant, it is always a threat. The property has its value. If a tenant goes, it doesn't mean the property has lost its value. Sometimes the new tenant can bring more value to your property. And if the rent is increased, if the fit outs has been increased, it will increase overall the valuation of the property. And the second thing, as Rakesh mentioned, no capital growth. Commercial properties actually behave differently than the residential property markets, right? We have seen in the, like for example, we are in Melbourne area. We have seen, and majority of the investors may have seen, in the last 3 to 4 years time, in the residential property market in Melbourne, Victoria, there is no such growth. But we have seen commercial properties, they have risen by maybe 40%, 60% in price in the last 2 to 3 years time. Because in commercial, how strong is your tenant, how strong is your lease, how strong is the location, this matters a lot. Commercial property works entirely different than the residential property market. Even if there is no growth into the residential, commercial can works well if the tenant is good. Yeah, Rakesh, you can continue.
Okay. Thanks a lot, Vikas, for your good insight. So there was a question from Singh Kregiban. So before I answer this question, that's my next point is, I think that will answer his question as well. That how much money you need to buy the property. That what I was. The next myth is, a lot of people when I talk, they think that commercial properties can only come in millions of dollars. So you need a really good deposit to buy commercial property, which is not at all true. I think in the start of the PPT, Vikas have shown more than 40 examples, 40 properties we have bought below 500,000. So if you're buying a property below 500,000, even we have client with 80 to 90K only in their SMSF, and we have bought the commercial property for them. So even with only 80,000 or 90,000 in the SMSF total cash, we are buying commercial property for them. So there is no such thing that you need huge amount of cash or huge deposit to buy a commercial property. Even with 80 to $90,000 cash in your SMSF, or even outside SMSF in general, you can buy commercial property that will be positive cash flow. So type of return you are getting from that, you have money in your from your super fund, industry fund, the same type of return you can get with the commercial property in terms of positive cash flow. And again, there is a capital growth which is not there. If your money is sitting with the industry super fund, you are getting 10 to 12%, maybe 13% per annum return from the industry super fund, but there is no capital growth. When you are investing your money in the commercial property, there is a capital growth, which is the real benefit of investing money in the real estate market.
And
And
second thing is the leverage actually. If you are investing your 20%, 30%, whatever amount you have, for example, you have $80,000, right? So if you are investing $80,000 in some other stocks or any crypto or in gold, so you are investing only 80,000. You are not leveraging that. But if you invest into the any real estate, whether it is the resi commercial, right? So you can take maybe 70 to 80% mortgage. You are paying the interest rate of maybe 5%, 6%, but you are getting the capital growth on 100% of the 100% of the value. So the leverage is the big thing which multiplies your wealth.
okay, so next big myth is too hard to finance, which is not true. So like you can get the finance for resi properties, you can get the finance for commercial property. When it comes to SMSF, it's exactly same. The process is same, the LVR is same, you can get similar LVR, the interest rates are quite similar. When it comes outside SMSF, even commercial properties have edge over the residential properties, because commercial property, the rental return is much higher than the residential properties. So when bank evaluate your serviceability, with the higher rent, your serviceability is more. You can borrow more money when you're buying commercial property. So even if you don't have any serviceability, I will talk about a special product in the coming slide, which is known as lease doc. Bank can lend you money just based on the lease income of the property. So finance is much easier when it comes to the commercial property. So next big myth is no depreciation, which is totally wrong. So commercial properties are giving much more depreciation than residential property, and I will give you the reason for that. I won't say just because it's a commercial property. When you buy any residential property, any property that you're buying, if it's a established property, if it's an old property, it's not a brand new build, you can only depreciate the building of the property. When it comes to the residential, you can't depreciate any appliances, any type of air conditioning unit, heating unit, your appliances, which are your dishwashers, your any type of appliances, so they can't be depreciated. Whereas if you buy commercial property, doesn't matter commercial property is 10-year old, 20-year old, 40-year old, 100-year old, each and every equipment can still be depreciated. And commercial properties construction cost is much higher than residential property. And on top of that, uh, your tenant spent a lot of money on the fit outs. And some of those fit outs are permanent in nature, which belongs to the vendor, which can be depreciated as well. So I will show you a real example after few slides. For depreciation, we have recently bought a property in Townsville for 850,000. The net rental return of that property is more than 55,000, and the annual depreciation of that property is 30,000 per annum, and it's an old property. I think it's more than 30-year-old property. It's still the annual depreciation of that property is 30,000 per annum. I will show you with the help of evidence and my email and everything. So the next big myth is it's only for big investors, that commercial is only for the big industrial people, businessmen people, which is again not true. So commercial property can be bought by anyone, any person who is doesn't matter, he's running business, he's a job person. So anyone can invest in the commercial market. You can start with as low as 200 250K purchase price, with only around 80 to 90K cash in your SMSF or outside SMSF. So there is no such thing that only big investors can buy the commercial property. Now, as I promised, I will take few questions, then we'll continue with this PPT, and then we'll take more question towards the end of the PPT. So, Vikas, can you tell me what is the question, and I'm happy to answer any of the question asked by our
Yes, so basically the
audience.
question was, it is from AP. Hi team MMP, will you be discussing which lenders will lend to an SMSF, as I have been told that the big four etc. will not touch SMSF.
Okay.
Yes.
So thanks, AP, for your question. Your question is valid. So Big Four is not lending anything for SMSF. Even if when the residential properties you can buy at that time also, the Big Four was not lending. Let me tell you the exact reason. Before COVID, all Big Four were in the SMSF lending market. They were giving the lending to the SMSF. During the COVID, if you remember, those who can remember, that the government allows you to take your money from the SMSF because everyone was struggling, the businesses were going down, the jobs were lost because of COVID, and to keep up, to help you, the government, federal government allows you to take some money out of your SMSF. From after that, all big four lenders exit from the SMSF lending market. So since COVID, the big four is not allowing any lending, but there are other lenders, Latrobe, there are Grey Knight, so many lenders are there which lend for the SMSF market, and a lot of people are getting the lending from those lenders.
Yeah, just adding on it, Rakesh, like on this AP's question. So in SMSF, basically the interest rate is little bit higher as compared to the if you buy a property outside the SMSF, maybe 1%, 1.2%. It depends on how much LVR we are getting, right? And yeah, so the lenders are there. Mortgage is not that hard. Like today, for example, they like we secured one property. It is in Melbourne Metro, and the price was around 1.11 million. And the loan is from Granite, and Granite is giving 80% LVR at a interest rate of 7.54%. Right. So the lending from this small lender is not that hard, but of course, like because these are the small lenders, so sometimes they charge, maybe little bit higher application fee or something like that. Like the big lenders may charge maybe 0.5%, 0.6% application fee, and they may charge maybe 0.8 or 1% application fee. These are the minor differences only, but yes, in SMSF lending is quite possible.
What's the next question?
Next question was from Jadip. Now, what type of growth have you seen in your top five markets over the last 10 years, while acknowledging rental yields are very good?
So growth in terms of capital growth, yes.
Yeah, yeah,
Okay.
capital growth, correct.
So as I already mentioned, Jadip, this part before, there is no data available. That's where people get confused. But if you want more detailed on the capital growth, you can book a half an hour session, and I can have a one-on-one session with you where I can show you more examples of the capital growth. So how capital growth works in commercial property? Let me explain you with the help of an example. I think that will help you guys understand more about the capital growth in commercial properties. So let's say you buy property today for $1 million, and today's net rent is 70,000 at 7%. Even we are buying above 7%, I'm considering conservatively at 7%. And there is a 4% increment. All the leases in the commercial market comes with predefined increment every year. Either it's 3.5, 4%, CPI. So we'll consider there is a 4% increment as part of the lease. So every year the rent is compounding by 4%. So if I go in the first year with 70,000, the after first year the rent will be 4% of 70,000, which is 2,800. It will be 72,800. Then at the end of the second year, your rent will be increased by another 4% of 72,800, which will be approximately goes to 76,000. Then in the third year, it will again increase by 4% of 76,000, which will be 3,200. So it will be 79,200. So this way, I'm taking after at least if you go by 7 years, in 7 years, your net rent will be more than 95,000 just by the 4% increment. I'm not assuming there is another factor that I will come to later. So it with just 4% increment, the property you bought at 70,000 net rent is giving you 95,000 net rent after 7 years. So yeah, and you have bought a property in a market where the interest rates are around 6.5 to 7%. In today's market, I'm talking about outside SMSF. If you're talking inside SMSF, you can consider between 7.5 to 8. Outside SMSF, it's 7.5 to 6.5 to 7%. And these interest rates are considered to be on the higher side. It's considered on the higher side, and we are expecting interest rate cuts in the coming months or maybe years. So if you are going with the right strategy, when you say right strategy, like I myself buying commercial properties now. I have bought one property last year. I already bought one property this year, and I'm looking for one more commercial property because the interest rates are higher. And what my strategy is, I hold the property for few years until the interest rate cool down. When the interest rate goes around 4.5, which is the which all the market expert consider it's a genuine interest rate which is possible in the market. So if interest rates in the market is around 4.5 and your property generating 95,000 net rental return, and at that time, even if you sell your property at 5.5 or 6% net rental return, 5.5 to 6% net rental return, for the buyer it will still be positive cash flow because he's paying to the bank for 4.5 and he's buying the property at 6% net rental return. At 6% cap rate with the 95,000, your property's valuation is 1.6 million. And I'm quite conservative when I'm talking about these numbers. With 96,000, your property is 1.6 million and you bought that property for 1 million. So you got approximately 600,000, and that's only just based on the rental income and the interest rate. I haven't considered the other factors, which are the population growth in that area, the land growth, the land value increment in that area, the other businesses are coming, new shopping center getting built, new businesses coming around. So those factors also add up to the capital growth. And when I was talking about 4% increment, 4% is the every year increment. But when there is a lease renewal, whenever the lease finishes, there is a new lease needs to be signed by the tenant, or there is a option executed by the tenant. During that time, there is a market review. So what do you mean by market review? Market review means you can increase the rent as per the rent in the market. That's where is the opportunity. You can increase the rent by 10%, 15%, 20%. And in commercial market, the commercial tenant pays the rent because they have spent money on fit off, they have businesses running, they have their client coming to that particular location, they have foot traffic, and they don't want to move the location just because of your rent increment. So that's the biggest opportunity. So these are some of the factors that contribute to the capital growth. And if you need more examples, if you want to discuss more on the capital growth, you can book another session where I can help you with more examples one on one with the capital growth. We'll take a couple of more questions, Vikas, then we'll move forward with the
Yeah, we
PPT.
need to move fast because there is a lot of stuff which we need to cover, and we
Yeah.
are already running behind, I guess. Right.
So
So the next question is, how much can I use from the total amount I have in my SMSF?
so there is a
How much amount?
little bit buffer you need to be kept. Like if you have 200,000, we normally say between 5 to 10% is the buffer. If you have 200K in your SMSF, you can invest at least 180. You can invest 185, 190, but 180 you can easily invest, and you can keep 10% as the buffer for the repayments or any expenses that can come after purchasing the property once you start getting the income from the property.
It is a liquidity basically. We in technical terms we call it liquidity. Like this much
Yeah.
liquidity you should left in your SMSF.
Yeah. So one last question, Vikas. Is there any more question?
Do you need to do you arrange borrowing also, or I need to connect to the borrower? It is a
Yes.
question from Ashish. Yes, Ashish, like we are working with with a lot of mortgage brokers, because in commercial property sourcing the property till settlement, it is not the only job which we need to do. Finance is a bigger portion of our scope of services. So to majority of the investors, we need to provide the mortgage brokers to for arranging the finance. So of course, yeah, we have a team of mortgage brokers which we can provide you, and they can assist you in getting the finance from any lender in the market. We have industry. Okay, it is
Okay.
already answered.
Okay. So we'll take more questions towards the end now, Vikas. We should
Yeah.
continue with the presentation. So, guys, thanks a lot for your questions, and we have tried our best to answer all of your questions, and we are happy to answer any of your questions, and we'll answer those towards the end. So, commercial properties that you guys can buy under 650K. So it's not like you can only buy retail shops or you can only buy office space. All sort of assets are available under, and we have bought all type of assets under 650K budget. It can be a retail shop, it can be offices, it can be industrial unit, medical and consulting suites. You can buy mixed use properties, you can buy storage and specialty properties. We are even buying multi-tenanted properties where there are two or more than two tenants in the property. We are buying resimercial properties. Resimercial means there is a combination of commercial and residential tenants, like two or three commercial tenants and two or three townhouses or unit, which is the best combination when it comes to the risk. It covers maximum risk when it's a combination of residential and commercial tenants. So now let's talk about with 250K in your SMSF deposit, what you can buy. So Vikas, do you want to explain this?
You can go this.
Okay. So if you have 250,000 SMSF deposit, so how it gonna work out? So let's say you have 250,000. So if we go with 70 to 80% LVR, which we have mentioned here, if you're going with 70% LVR, you can borrow 437,500. If you go with 80% LVR, you can go up to 580. You can borrow up to 580. So the purchase price can go from 625 to 830. So 625 is the minimum you can buy. 800, sorry.
This slide will be explained in the next slide. I guess I can explain that. This slide number 27. Go next.
1 second. Okay. So yeah. So I was saying that this is the minimum price you can buy. 830 is the maximum, and total net rental return 7%. Let's talk more about in the next slide. So you're talking about this slide with us?
No. Go next. Go next. Next. This is this one basically.
So this one, let's talk about this. So if you have 250,000 balance in your SMSF, if you're taking 70% mortgage, your loan amount will be 437,500. Your deposit 30% will say other acquisition costs, which include 4 to 5% of your stamp duty, solicitor fee, building and pest fee, plus your professional fee, which include buyer agent fee. It comes around 8% of the purchase price. So you need total cash is 237,500. So you have 250, which is good. With 80%, you need 232,400. So purchase price will be 625. Here the purchase price is 830,000. At 7% net rental return at purchase price of 625, your net rental will be 43,750. At bank interest rate of 7.54, your mortgage repayments will be 32,988. And we are included even outgoings, which normally paid by the tenant. Just on the safe side, we included outgoings of around 4,188. So after adding the outgoings plus the mortgage repayments, you still have a positive cash flow of 6,575. That is very, very conservative figure. Conservative because we have indicated the rental yield 7%, which we mostly get more than 7. And we have added the outgoings, which is normally not paid by the landlord. So this positive cash flow is much more in real case scenario. With 80% LVR, your positive cash flow is 1,469. And the reason is because you are buying a high ticket property, 830,000. You are getting bit less positive cash flow, but the capital growth is much more. If you go with the percentage capital growth, 830,000 K property is giving you more capital growth in the future. So that's the scenario if you are buying commercial properties with 70% and 80% LVR with 250K cash in your SMSF. As I mentioned, you can even buy property with 80,000, 90,000 cash in your SMSF. So I think this point is clarified. Now talking about the leases, which is one of the most important thing which a lot of investors are confused. So because all of you guys have experience buying the residential properties. So when you buy residential property, it's a standard rule. Tenant only pays the rent per month. They don't pay any council rate. They don't pay any water rate, any insurance, any property management fee, any maintenance, irrespective of the state you are buying. Doesn't matter you're buying in Western Australia or you're buying in Queensland or in buying Victoria. So these are the set rules from each state government, and you can't change that. You don't have right to even create a lease where you can ask your tenant to pay for the council rate. It's not allowed. Whereas in commercial properties, the leases are bespoke. You can design the lease as you are negotiating with your tenant. It can be designed to add any type of outgoing. So the standard type of leases which exist in the market, the very first one is gross lease. The gross lease is where all the expenses are paid by the landlord. So it means tenant is paying the gross rent. Tenant says, I don't want to go into the outgoings part. For 1 million property, instead of 70,000 rent, I'm happy to pay 90,000, which is approximate 20,000 is the outgoings. But I'm not paying outgoings. Outgoings will be paid by the landlord. So in gross lease, the landlord pays all the outgoings, which include your council rate, insurance, maintenance, land tax, any utilities, property management, everything is paid by the landlord. But when we say gross lease, we don't buy gross lease property with 1 million for 70,000 rent. Automatically, the rent of that property goes higher because the outgoings are paid by the tenant. It's just a structure of the lease in a way that instead of tenant taking responsibility, the responsibility is on the landlord for the outgoings. The second type of lease is net lease. Net lease is where the landlord gets the net rent and tenant pays the outgoing. In net lease, there are three different type of net leases. Now, the very first is single net lease. In single net lease, the tenant pays rent and the council rate, but the landlord is responsible for the insurance and the maintenance. So it's a one step ahead of gross lease, but it's not fully net lease. So in this type of lease, if you see the rent is always higher because still some of the outgoings are paid by the landlord. In double net lease, which is very common, which is most of the properties that we are buying, if we say more than 80% of the properties are coming with double net lease, where the tenant pays the rent, tenant pays the council rate, tenant pays the insurance of the property, building insurance, which can be $8,000, $10,000, any amount. The landlord is only responsible for the structural maintenance. All the internal maintenance, like your tap is leaking, your dishwasher broken, there is a paint needs to be done, air conditioning is not working. All those are responsibility of the tenant. The landlord is only responsible for structural. When I say structural, like there is a roof that needs to be fixed, something goes with your walls. So all those type of maintenance is the responsibility of the landlord. Then comes the triple net lease, which is the most favorable lease for the landlord. This type of leases you will mostly find for the childcare properties, for the fuel stations. Those are high price ticket properties. They are triple net lease where the tenant is responsible for everything, including your property management fees, including land tax. Everything for the property is responsibility of the tenant. But when you see triple net lease properties, their rental income is net less. So it's like the the tenant have to spend for 1 million property $90,000 per annum. Either you can take 90,000 fully from the tenant, you can pay the outgoings, or you can ask tenant to pay 70,000 as a rent and 20,000 outgoings can be paid by the tenant. Or you can say pay 80,000 as a rent and 10,000 outgoings you pay and 10,000 I pay. Doesn't matter which type of lease is there, but the net rent that is coming to our client is more than 7% all the times. Even its outgoings are paid by the tenant or outgoings are paid by the landlord. So these are the different type of leases that exist. It's not there in residential. That's where residential investors get confused because they have never thought even that these type of things can be paid by the tenant, and that's where they struggle because these council rates, these water rates keeps on increasing every year, where the rent doesn't increase that much. Whereas in commercial, even if your council rate increase by 10% every year, you don't worry because council rate is the responsibility of the tenant. It's not your responsibility. This I have already discussed. Now, as we have already discussed, we have already talked about purchase price of 625,000. Your loan amount will be 43,700 and sorry, the net rent will be 43,000. Your loan repayment will be 32,000 and there is a positive cash flow of 6,535. Now try to understand, I want to put one point here before I move forward. So this 6,535 positive cash flow is in today's scenario when we are considering the interest rate at 7.54. As the interest rate will go down, your positive cash flow will increase. And if you're trying to buy the property when the interest rate has already gone down, you won't get the property at the same rental return which you're going to buy today. It's not like if today's market, the interest rate is 7.54 and after 1 year, the interest rate is 6.54, you will get the similar return. Market adjust automatically. Last year when there were 3 rate cut happened, we were buying properties around 6.2, 6.3% net rental return. Because of the three interest rate cut, the market has changed, and it's the seller knows that now the interest rate is down. They were selling the properties at less net rental return. So the good point about this is, even if the positive cash flow is bit less, it will increase in the coming years when your interest rate goes down, and automatically it will add up to your capital growth. Now, this is a typical example that we talk about when you're buying a residential, when you buy commercial with the same price, same type of interest, same type of loan, and comparing the commercial versus residential in SMSF. Although residential is gone out of the market, but still, just for comparison, I want to talk. And same comparison you can use for your buying outside SMSF. So if you're buying a property of 625,000, purchase price is 625. We are taking 70% mortgage. Doesn't matter it's a residential or commercial. We are taking 70% mortgage, which is 437,500. The interest rate is 7.54 for SMSF. The cash required to buy this property is 240,000, which include all the expenses, 30% deposit plus soft expenses, which is your stamp duty, buyer agent fees, and other soft expenses. So yearly rent for the residential, considering $6,000, $600 per week for a 625 purchase price. Uh, the gross rent per annum is 31,200. For the commercial property at 7%, the net rent is 43,750. So the rental yield here is 5%. The mortgage that you are paying for this residential property at 7.54 is 32,000. Same you are paying here as well, because we are taking the same LVR, same interest rate. The depreciation for the residential property, you won't get more than 7,500. For commercial properties, we are getting depreciation 20,000, 25. To be on the safe side, we have taken 20,000. So the outgoings in the residential, as I mentioned, all the outgoings needs to be paid by the landlord, your council rate, water rate, your insurance. So outgoings are around 15,375. Whereas in commercial, all the outgoings are paid by the tenant. We have just assumed the PM fees and other minor expenses, so which is around $5,000. So if you add up all these values, your cash flow for the residential is negative 70,000, 17,000 per annum. So you need to put $17,000 every year to hold the residential property at today's interest rate, which is around 7.4% negative return on investment. So the money you have invested, which is 240,000, so you are losing, sorry. So you're losing 70,000 every year. You are putting 70,000, so it's a negative return on investment is 7.4. Whereas in commercial property, you are getting around 6,575 positive cash flow, which is a positive return on investment of around 2.76%. So if you see, there is an annual swing of 23,000. Instead of paying 17,000 from your pocket, you're getting 6,000 in your pocket. So annual swing of around $23,000 if you're buying a same type of commercial property with the same budget in SMSF. If you buy outside SMSF, this positive cash flow is even bigger. So now we have talked a lot about the commercial properties, what is good about commercial, what are the things you need to do, but what are the things which people don't consider when they buy commercial property? Please consider all these points before you buy. Doesn't matter you are buying yourself, you are using some professional, you are taking advice from your mortgage broker, from your accountant, from your friend, from your family member. So please make sure you take care of this point. First is chasing high yield. A lot of people thinks when they look at a property, there is a 9% rental yield, and they just consider that high yield as a priority and sign the contract and buy the property. Wherever they ignore the tenant quality, wherever the tenant is just have in the building from last 6 months only. The lease security, the lease is very basic lease. There is no personal guarantee. There is no rental bond. They haven't considered the vacancy risk in that area. So without considering the risk, they just chase a high yield, which creates a big risk in the coming years. Overpaying for the property. So overpaying means they just look at the asking price. They don't consider the comparables. They don't check for the properties available in the market, the recent properties that has been sold with a similar type of building, similar type of cover floor area and land area, and they just consider the asking price at the as the parameter, and they overpay for the property. Poor tenant or lease analysis. Again, as I mentioned, they don't check the lease properly, because lease is something, as I mentioned, in residential, you shouldn't have to worry about lease, because residential leases are standard leases with every state. Victorian residential lease is one lease which everyone in the Victoria has to acknowledge, has to entertain. Whereas in commercial, every lease is different. You can put any condition in the lease, you can put any type of rent in the lease. So sometimes they don't check the lease properly, they just go with the values mentioned on the ad of the property, and they move forward, and they find out that they have bought a wrong property. The next biggest mistake people do is inadequate due diligence. So inadequate due diligence means, when I say, they say it's a commercial property, a lot of commercial properties are getting sold in the residential zoning as well. So the zoning is residential, although it's getting used as a commercial purpose. But if your tenant leave that property in the future, it is very hard to find another commercial tenant because of the residential zoning, and that property can't be used for multiple commercial uses because it's under the residential zoning area. If it was getting used as a particular milk bar, like if you see a lot of milk bar in the old areas, they are in the residential area. So if that milk bar gets closed, it's not like you can open a retail over there, or you can open a office over there, or you can open any type of commercial, because that's not commercial zoning. It is only allowed to operate as a milk bar. In the future also, you can only use it as a milk bar, or you have to do a lot of effort to get the permission from council for a different type of use. So that comes under due diligence. So that's again, as part of professionals, we make sure that all these planning issues, environmental issues, legal issues are taken care of. So another big problem is, another big mistake is hidden cost. So the purchaser don't consider all the costs associated with the purchase. Like, there is a land tax. They don't consider what sort of land tax is applicable. Sometimes they already have 5 properties in the same state, and they are buying the sixth property where the land tax threshold is already met, and they are going to pay very high land tax. The repairs, not always that repairs are responsibility of the tenant. As I mentioned, it depends on lease to lease. So being professional, we check what sort of repairs are the responsibility of the tenant, what sort of repairs are the responsibility of the landlord. Accordingly, we consider the risk. Accordingly, we'll see the rental return. The insurance premium, who is responsible for insurance? People don't consider whether it's in a flood zone or not. Sometimes you buy property in a flood zone where the insurance is covering the flood risk, but after next 1 year, the insurance company says we are no more covering the flood risk, and you don't have any other option. You have to buy the insurance without flood cover, and if there is a flood, you have no option. So those things are checked as a professional. Compliance and capital expenditure. Sometimes there is a roof which needs to be replaced, and it's a big expense. And if you don't consider that, in 6 months' time, your tenant says, I don't want to pay the rent because there is a leaky roof is leaking, and I can't run my business. And there you need around 80,000 to 100,000 for roof replacement, but you don't have money. You are stuck in a situation. So all these things needs to be considered before you buy the property. Then the next one is buying the wrong asset for their strategy. Like, I'm not saying everyone needs cash flow, everyone needs this growth. If you are already having negatively geared portfolio, you are having 4, 5, 6 residential property, you need good positive cash flow property. So then your strategy should be to go with a good high cash flow property, balancing the growth. But if you don't have any other assets, or it's your first or second property, then cash flow shouldn't be the biggest priority for you. Then you can balance between the growth and the cash flow. Even if the cash flow is a bit less, you can concentrate more on the growth. So you need to consider your profile, you need to consider your situation instead of buying any random property. The last one is emotional decision making. Emotional is something which I have seen a lot of buyers get emotional with the property because they have visited the property twice, they have seen the photos, they have shown it to their friends, family, and everyone said it's a good property, or they are carried away with the type of tenants, they have some emotional link with those type of tenants, and they buy the property just based on emotions, not based on facts and figures. So please guys, if you're buying a commercial property either yourself or with the help of any investors, make sure you avoid these type of mistakes. So we have already told you the properties we bought. Now time to show you some of the properties which are available right now with our team below 500 and bit above 500 for commercial properties which are currently available, which we can buy for you guys if you want, and you can talk to us tomorrow. Like the very first property I'm talking about, it's in regional Victoria. The purchase price will be around 280K. The rental income on that property is 20,000 plus GST plus outgoings, and around 4% annual increment is there. This property is the rental yield is 7.14, and it will give you positive cash flow of $6,692 considering 70%. All of these properties are considering at 70% LVR. This is a retail property with lease till June 2029, and there are further options in that particular lease. And on top of that, this property is giving around 14,000 annual depreciation. That figure I haven't put here. That's a 14,000 annual depreciation for this property. Another property is available in regional Queensland. The purchase price will be around 510. We have negotiated to 510, and the rental income is 45,700. The rental yield is close to 9%, and the positive cash flow is 21,460, and it's a national tenant. It's ASX listed national tenant in the property. They have the lease till April 2029, and there is a one further 3-year option. They occupied the property in 2023. They have recently renewed their 3-year option, and there is a further 3-year option. And all of these properties I'm talking to you, they all are freehold properties. First of all, none of them is a strata property. The next one is 640. It's in regional New South Wales. The rent is 51,779. And this property's beauty is this is a combination of residential and commercial. There is a 3-bedroom unit at the top, and there is a commercial tenant on the ground floor. It's a freehold property, and it's giving you positive cash flow of around 22,435. The residential 3-bedroom unit is rented at $450 per week, and commercial tenant is paying the outgoings, 50% of the outgoings, and remaining 50% are paid by the landlord. And when I say 51,000, the actual rent is 58,000. We have taken care of the outgoings paid by the landlord for the residential part. That's where the net rental return is reduced to 51,000. So 51,000 is after all the outgoings even paid for the residential tenant. Then there are 3 more at 780,000. It's in Melbourne Metro. Considering the metro location, not even metro, will say it's just maybe 2 kilometers from Melbourne CBD, maybe 2 to 3 kilometers. So it's a very good cafe with lease till 2031, brand new 5-year lease plus 2 5-year options further. And the tenant is there in the building maybe more than 10 years. And the positive cash flow of this property is 16,000. So this type of property is more for growth. Although the positive cash flow is less, but this type of properties are more meant for the capital growth. There are 2 more properties with 800,000 in regional Victoria, multiple tenant, 4 different shops, 4 different tenants with mixed leases, CPI 3% increment, and the positive cash flow of that property will be 33,000 at a purchase price of 8. Then we have 1.275 NDIS. These are some of the example. We have much more than this available with us in different price range, different type of assets, different type of requirement that can be met for the different type of investors. If your guys are interested in any of these type of asset or any of these I have shown to you, you can talk to us tomorrow. You can call me or Vikas, and we can go further and we can explain you and we can move forward with buying that asset for you. So as I was talking about the financing, I said that I will give you towards the end of the PowerPoint, I will talk more about the commercial financing. So in residential, if you don't have serviceability, you can't borrow money from the bank. You know, you have tried, you need to have serviceability, or there are options to go with the low doc or the second or third tier lender where you pay interest rates of around 8.5 to 9%, some application fees, some exit fee. If you have borrowing, then you can go with 80-20 in residential. But in commercial, if you don't have any serviceability, all your serviceability is exhausted, or you are running a business, it's hard for you to produce all the documents required by the bank to approve the loan, like your ATO portal, your BAS portal. So, but commercial comes with all the options. There is a lease doc product where you can borrow up to 70%. no servicing needed. They don't even ask any single income document from you. The bank will lend you money just based on the lease income of the property, and this product is available from all the major lenders. Maximum mortgages we are getting from CBA and Westpac at 70% LVR. The interest rate is anywhere between 6.6 to 6.8 or 6.9. I'm talking outside SMSF. Inside SMSF, there are no big four lenders outside SMSF. And 70% LVR, no extra cost, no hidden cost, no exit fees, standard loan like you getting for your residential. Full doc option, as you know, always there up to 80% LVR. It needs servicing. You need to produce your income documents. It can be your PAYG income. It can be your business income. If you have serviceability, you can borrow up to 80%. The interest rate will be same as lease doc. No change in the interest rate. Only change is your LVR. Then comes the low doc. As I mentioned before, low doc is always there for resi and commercial. You can go up to 80%, but the interest rate will be quite high. And there are other extra expenses which you need to pay at the start of your mortgage and as part of the exit fee if you exit the loan before some specified dates like 3 year, 5 year, as mentioned in your contract. Then for the SMSF, up to 80% you can borrow. We are borrowing 80% for a lot of our clients. And the as Vikas just have gave example, we got the approval for one of our client today. We bought a property for 1.1 million. It's in Victoria Metro, and he got 80% in SMSF at 7.54 interest rate. So which is really good.
I
So
just want to add on the low doc here actually for the audience. Like though we have shown the low doc option here, but we have never gone with this option low doc in commercial lending, because as long as we have the lease doc option available, there is a no need to go for low doc. In the low doc, the interest rate, as Rakesh mentioned, is more than 8.5%, 9%, and the lenders are the 3 tier lenders, 4 tier lenders, right? So the lease doc opportunity in the commercial real estate is the best option for the financing purposes. Though the LVR is 70%, 65%, but it is mostly preferred by all the investors. So there is a no need to go with the low doc.
okay. So why we mentioned low doc here, I want to add the properties, not all the commercial property qualify for lease doc, because if you're buying a property with 3%, 4% net rental return, like you're buying a 1 million property and the net rent of that property is 40,000. It's not like all commercial properties coming with 7% net rental return. More than 50% of the properties getting sold in the market are getting sold at 4, 4.5, and 5% net rent. Those properties don't qualify for lease doc. If you're buying that type of property, then the lease income is not enough to service the loan. Then you have to go to the low doc product. But the properties that we are buying, because we are buying positive cash flow property with at least or close to 7% net rental return, all of our properties qualify for the lease doc product. But it's not like you can buy any commercial property with lease doc. The only requirement for lease doc is your lease income should be good enough. So good enough means if close to 7% or more than 7%, it is considered as good enough.
It is basically, it should cover the interest component. Basically, there is a different requirement by each bank, which we call it ICR, in ICR, interest coverage ratio. So as long as the rental income of the property is covering the interest portion of the loan, so banks are happy to provide you the lease doc. Sometimes banks has the formula of 1.5x, sometimes 1.2x, sometimes 1x. So it depends on bank to bank, but they use the formula of ICR.
So we don't want to confuse you by, that's why I didn't mention, but in short, that if your property is positive cash flow, your property can qualify for the lease doc product. Now, these are some of the success stories, some of the properties we have recently bought for our clients. We bought a property in Morwell, Victoria for 2.35. The rental yield is 7.16. It's a national tenant, very big tenant. They have spent 1.6 million in fit outs in that property. So giving positive cash flow of 74,000, and the annual depreciation was between 50,000 to 70,000. That was the range given. We haven't created the depreciation schedule at that time. So that's where we don't know the exact value, but it was anywhere between 50,000 to 70,000. So we bought another property in Innisfail for 750,000 at net rental yield of 11.13% and giving positive cash flow 52,000. So 52,000 is almost an income of a normal person if you're working as a normal job. If you're not into a very big high-fi white collar job, your income, annual income is around 60,000. So with a purchase price of 750,000, it's giving you around 52,000 positive cash flow after all the expenses. It's not the net income, it's your positive cash flow per annum. Then we bought another property for 560,000 in Glen Innes. Glen Innes again, very good high growth area, and it was a new property built in 2019, an industrial unit. And again, the tenant was a national tenant having multiple branches in Queensland and New South Wales. Although the rental yield is 6.9, but as I mentioned, it is a new built in 2019, and the land size is 1218 square meter industrial land, and annual depreciation around 20,000. So still positive cash flow of around 16,000. And the last one we bought in Springshore, Queensland. It's a very small agriculture town, and the tenant is a national tenant. It's, I won't say one of the biggest, it is the biggest tenant. You must have heard about the agriculture tenant Nutrien AG. Nutrien AG is the biggest agriculture supplier of in Australia. They have more than 500 offices or branches across Australia, and that property was occupied by Nutrien AG. So we bought it for 990,000, and the positive cash flow is 46,000 per annum from that property, and the net rent around 90,000 for that. 91,000 was the net rent. So you can consider the freehold property with good lease, and it was having a 3 bedroom unit attached as well, which was used by the manager of the property, given to the manager. So all these properties were recently acquired by Team MMP for their clients. So what the experts and media are saying about commercial. So you can see these are the once we one more thing is we will share this PowerPoint and the recording of this webinar to you guys tomorrow or maybe day after tomorrow in 1 or 2 days. You can go through all the links are there where they are talking about commercial properties, what's happening, what's going to happen in the coming year, why commercial property is getting the attention now. So it will give you more idea what experts are talking, what market is talking about the commercial investments.
So
So
Rakesh, can we take the few questions? Like there are few actually. So
yeah,
from
yeah.
Prashant, what is your fee as a BA? So Prashant, it can be taken care. Like you can give us a call to any of the team member, maybe tomorrow, day after, as per your convenience, and it will be explained to you over the call. There is a question from Chris. During occupancy, tenant does the fit out on the floor and walls. This damages the property. Who pays to fix the damage?
Okay. So fit outs, whenever there are any type of fit outs happened as part of the lease, there is a make good condition.
Condition.
Make good condition is whenever the tenant leaves the property, it must have to leave the property the way they have acquired the property. The landlord have at that time two options. Either landlord can happy with the fit outs done by the tenant and says I'm happy, no need to change anything. Or if landlord want, they can ask the tenant to remove the fit outs and bring the property to the original condition it was before the tenant occupied. So you have the opportunity. Most of the time, the fit out add the value to the property. They normally add few things which like better lighting, better paint on the walls. Walls are made better. But if you think your property is depreciated or is not better after the fit outs, as part of the lease condition, you can ask your tenant to bring it to the original situation.
And then there are a few questions which we have already answered. There was a question from Prashant that I have already answered, I guess. And yeah, I don't think there is any question left.
So guys, now you can talk to me. So because the presentation is already, we have explained everything. So if you want, you can unmute your mic and you can ask any question and ask any cross question. Please.
Feel free to ask the questions now. Happy to answer. Thank you. Good presentation. Thanks a lot, Vinesh.
Thanks, Rakesh and Vikas. You explained it really well. I've got a quick question. I asked you about what sort of funding is required to start the process, but like as you have explained in the slides, there's nothing bare minimum. It all depends on the price of the property and all. But based on 200,000, what's a uh, what sort of backup, like 10, as you said, 10 or 15% you require for covering up any outgoings, or if the, let's say the property stays empty over a certain period of time, you will require that kind of sort of funding. So what's a so if I was to based on 200,000 in SMSF, how much I can use towards buying commercial?
So that's what we say, maximum 10% liquidity you need to keep. So 10% means 20,000 of 200,000 you can keep as a buffer, and remaining 180,000 you can invest. Because when you're buying commercial property, even if you put less than 10%, because commercial property we are buying with tenant in place and you are getting the rent from day one. So it's not like you're buying a property which will be rented in 3 months, 4 months time, and you need some money from day one. So there is a lease of 3 year, 4 year, 5 year in place. So you know from day one you are getting a rent and it's giving you some extra money after paying the mortgage. So your cash gonna keep adding up, plus your money, your employer is giving the contribution, that's also adding up. If you're buying a residential, you need more buffer because residential 100% are negatively geared, so you need money to cover the expenses, like some unknown expenses, like some maintenance comes which you have not planned. But in commercial, all the internal maintenance is responsibility of the tenant, so the surprises are very less. So not much buffer required when you buy commercial property. We say 10% is more than enough.
And what are the chances? Let's say you you find a property which is already tenanted and it has got 3 times 5, or let's say next 4 years already leased up and everything. What are the chances? Just like like residential properties, people uh, leave the house, they leave the tenancy, and they either cancel their lease or vacate the property without noticing. If this kind of thing happens, then what's the backup?
Okay. So this is a worst case scenario. First of all, during the due diligence period, as part of our due diligence being professional, we check their history, last 12 months, 24 months, rental repayments, what sort of business they are running. If they are running some sort of business which can go online anytime, we avoid those type of properties. Uh, First of all, that due diligence makes sure that tenant will not leave the property very soon. Then if something happens which we haven't predicted, and anything can happen anytime after buying the property, so there is always a rental bond as part of the lease which is there, cash rental bond, which can help you with your mortgage repayment until you couldn't find the next tenant. Sometime 2 months, 3 months, even 4 months rental bond is there as part of the lease. Plus there are personal guarantees of the directors in the lease. So even if they leave the property, it's not like it's a legal document. If leaving the property is easy, then any tenant can leave the property anytime. Then there is no meaning of lease. Then the signed lease document is just a paper if you can leave the property anytime. It's a legal document which is binding on both the parties. It is binding on you, it is binding on the tenant. If tomorrow there is another tenant comes, he says, I'm happy to pay 40% more rent what you are getting because I need this space. It is space which I need for my business. You can't break the lease. You can't say that to your tenant that I'm getting 40% more rent. Can you please vacate the property? Until the lease is valid, you can't do anything. Same thing for tenant. He can't legally vacate the property. There is a guarantee involved. So if you take them to the court, their personal assets are at risk. First of all, the company assets are risk on which the lease is signed. Once company assets are not there, if the company is bankrupt, if company have no assets, then whosoever have given the personal guarantee, their personal assets are at risk. Are you getting my point?
Yeah, great. Yeah, I think you've answered it. That there are written, like it's written in the lease, like
Yeah.
the
So
way owner can't run away, the tenant can't run away, and
yeah.
you got
So
like 2 or 3 months of a backup
yeah, 2 to 3 months
behind
as a
you.
cash backup. Plus there are director guarantees, there are company guarantees, which make sure that if anything goes wrong, those things can be used to protect your interest for the lease time.
And what sort of like do you guys as a company? I don't know if this question needs to be asked here or it's one on one. Is there a flat fee or a percentage? Like what
We have both
like
type of
do you work as a buyer's agent company? How do you
yeah,
guys work in
we are
this?
buyer's agent. We are buyer's agent. and we have both type of structures, flat and fixed. That's what Vikas already mentioned. So more about fee structure we can discuss one on one, because everyone's budget is different, everyone's requirement is different. So the fee we're going to discuss may not fit your requirement. So better, if you want to know more about the fee, you can call me or Vikas tomorrow anytime, and we can discuss about our fee structure which matches your requirement depending on your budget. If your budget is 2 million, for you fee structure will be different. If your budget is 500K, the fee will be different.
Thank you.
Hi guys, any more questions?
And just a heads up, like this, as Rakesh mentioned, we will share the recording of this webinar along with the presentation in a day or two. And few people asked about the PPT and the recording. So yeah, it will be shared with you guys. Like, just keep an eye on your emails. Maybe sometimes the email goes to the promotion as well, right? Because the email goes from the Zoho. So yeah, so CRM.
So if you didn't get it, and if you please message us, or you can call us or email us anytime, and we can send you again if you missed the email from our side. So, but yeah, we will share it. And again, this was a public platform where we discussed everything. You can book one-on-one session where we can discuss according to your requirement, your budget, your personal situation. How many properties do you own? Where are you in your investment journey? What age group you are in? What sort of planning you have for your future outside SMSF, inside SMSF, and we can create a strategy plan based on your requirement. So that can be done by, you can book half an hour session anytime.
I don't think, Rakesh, there are any further questions. And yeah, guys, thanks a lot for listening to us for this 90 minutes. Really appreciated. And there were the questions which were really engaging, right? So it gives us the opportunity to learn as well, right? So yeah, thanks a lot and have a lovely evening.
Thanks a lot, everyone, our team members as well, who have done a good effort bringing all this together, and to you all for attending this and making it a success for everyone.
Thank you. Thanks a lot.
Thanks a lot. Bye bye. Have a good night.
Thank you.